Thank you, Courtney, and thank you everyone for attending. I am Linda Knowlton, your FAMP president, and we are excited to have one of our great industry partners here today, Angel Oak. Angel Oak has always stepped up to the plate with FAMP. I don't think you've ever missed a trade show in all of our chapters. They're always supporters, and again, a high roller sponsor this year for our annual convention and trade show. And John, I want to personally thank you and your team for that. It is wonderful that we have this great relationship. We so much appreciate it. And we're going to, all right, so I'm going to turn it over to John right away. He's going to do all the introductions. That way I don't butcher anyone's last name, and you can explain who these wonderful participants are today. So take it away, John.
Yeah, thank you, Linda. And we really do cherish, and it is a true partnership. So thank you to you and FAMP for all your support also. And we have not missed a trade show. So, but thank you. My name is John Jimenod. She was afraid to butcher my last name. So, but my name is John Jimenod, Regional Sales Manager here at Angel Oak Mortgage Solutions. Today, I am really honored to have two of the best in the industry. Stacy Flanagan. Stacy, please say hello.
Hello.
And then Scott Gravel, also, the best in the business, both Stacy and Scott. Scott, please say hello.
Good afternoon, everybody.
Yeah. So not only do you have the best AEs, not only in the country, you have them in your own state of Florida. So we're really lucky to have them. And so today, what we're going to do, we're going to go into a deep product dive of bank statements. So it's our most popular program. It's about 60% of our business. And it is still, one of the things I wanted to share. In 2020, new business applications grew by 24% over 2019. That was the largest increase in over 10 years. And this segment is not slowing down. I went back out yesterday and looked at the 2020 numbers, and they're in. And 2021 new business applications grew by 22.7% over 2020. So this is continuing, you're seeing double digits there. So in the last 2 years, there's been a 54% increase of new business applications. So without further ado, everything we're going to do today is driven by our website, which is really easy and easy to navigate and really easy to use. So Stacy, take us away and just give us some highlights of our bank statement program, and then we'll go into a Q&A after we get through all this.
Sure. Thanks, John. Thanks, everybody, for having us and the FAMP, of course. We do appreciate being here so much and talking about the bank statement program. Like John said, it's our #1 program. We do a lot of business on the bank statement program, especially a lot of people opened up their own companies after COVID. So we have really seen an increase in this business. So the bank statement program is for somebody that's self-employed or 1099 for the last 2 years. And instead of using their tax returns, we're going to use the deposits that go into their bank account as their income. So again, we're not going to look at their tax returns because we all know self-employed people write everything off as they well deserve to. So we're going to look at what they're depositing into their bank account. They can be personal bank accounts or business bank accounts. That's up to the borrower. Wherever they put the most deposits is fine. The deposits going in is what we're going to use for their income. I don't care about cash flow that's coming out. We've had that question before. We're just looking at the deposits. Again, we can use personal or business. We go up to 90% loan to value. We go down to a 600 credit score for these borrowers. There's no MI on any of our programs, which is awesome. And again, with the bank statements, you can use 12 months or 24 months of bank statements. Why would you use one over the other? LTV is the same. It's still as little as 10% down. There you do get a little bit better of a rate if you use the 24 months versus the 12. But a lot of people might have suffered some deposits during COVID 24 months ago, or maybe they just opened their business 24 months ago. So the first year they were just ramping up and their deposits weren't as strong. So maybe they just preferred to show the 12 months of most recent 12 months of statements. That's totally fine. Again, we go to 90%, either 12 months or 24 months. The thing about the personal bank statements, anybody that's on the bank statement does have to be on the loan. So as we're increasing your buying power, allowing them to use these deposits instead of their tax returns, you also have that hybrid loan, if you will. If the co-borrower is W-2'd, we can use their income as well. I never want to see bank tax returns, but I can use the W-2s and pay stubs for the co-borrower, again, to give them more income to build up their buying power and maybe afford a larger home. We all know that house prices are increasing tremendously over the last year, and being able to buy that home using their deposits going into the bank instead of their tax returns has really been helpful for most individuals self-employed out there. We do purchases. We also do refis, cash out or rate and term. Owner ocs, second homes, and non-owner ocs can all be done on the bank statement program. We do 1 to 4 family condos, and we also do non-warrantable condos. Being in Florida, we all know we have a lot of non-warrantable condos out there. Just ask the real estate agent, or maybe you already know why it's non-warrantable. That's the first thing that one of us AEs is going to ask you. There's some that we allow and some that we don't. So just find that out, but we do allow non-warrantable condos. The other great thing about the bank statement program, and all of our programs for that matter, is we offer a 40-year fixed interest only. So the first 10 years is going to be an interest only payment. And right now, that's actually a really good selling point. Interest rates we've all seen are creeping up there quite a bit lately. So allowing them an interest only payment for the first 10 years, and then after 10 years, it'll automatically convert to a 30-year fixed loan. So again, big selling point right now. Loan amounts, we go up to $3 million. If you have some slightly over, I'm sure all your AEs will be more than happy to help you try and get that through. And the minimum loan amount on the bank statement program is $150,000. So that's pretty much the basics, highlights of the bank statement program. The only thing I do want to mention again, now that we're seeing a lot of this in this day and age, is delayed financing. If I can just touch on that real quick. A lot of people are paying cash for homes because there's multiple backup offers. They're afraid that they're not going to close in time and the seller's not going to extend the contract because maybe they know they can sell it for more. So we offer delayed financing. So if they close on the house and use their own funds or private money, we can turn around and recoup their cash day after closing. They can start the process right away and then help them recoup their cash and get it back into their banks or savings account as needed.
Thanks, Stacy. Appreciate that overview and those other little tidbits in there. Really do appreciate it. Hey, we're going to do a deep dive, and just so everyone knows, this is going to be recorded and this will be sent out to you. So we really appreciate your participation. So this part of this deep dive, Scott's going to talk to us a little bit about what we really like to see on the 1003, and because we all know, and Stacy just mentioned it, delayed financing. There's multiple offers. So the better information you can get us up front, and the information that's going to be required by Scott and Stacy to do a proper prequal. Scott, tell us what we'd like to see on the 1003, please.
Yep, John, exactly right. So you nailed it on the head. When we're doing a pre-approval, any of your account executives, the 1003 obviously is our map that's going to tell us everything about that particular scenario and that particular loan. So the better quality 1003 that we have, the better quality pre-approval we can issue. And more importantly, it really, from an AE standpoint, makes us a lot more efficient because we can turn that pre-approval back to you quickly. So I like to tell my loan officers, look, think of it no different than if you were putting together a 1003 for a self-employed borrower and you're about to go run DU or LP. You're going to make sure you have all of the information nice and tight on that 1003 because you're looking for that DU or that LP approval. It's really no different when you're sending it over to one of your account executives for us to do the pre-approval. We, in essence, are your DU and LP at that particular point in time. So, for example, the employment section, you have a lot of self-employed borrowers that might be a Schedule C or a 1099. We want to see that employment section filled out as detailed as possible. Obviously, if the borrower is a business owner, you can simply list the name of the business that they own. You can check off whether they own more or less than 25% of the business and mark them off as an owner. Perfect. But if they're a Schedule C, and it could be the borrower maybe is a handyman on the side, or maybe it's somebody that is a house cleaner or something along those lines, we do need the 1003 to specifically state that to us. So in the employment section, you may want to put in there house cleaner filing as Schedule C, position house cleaner for the borrower. We need to be able to see that, and it trickles down from the employment section. That trickles down into how we calculate the income when we're looking at the bank statement. So that's a really important point. Probably the only big difference you're going to see on the 1003 on a bank statement loan is the income section. So for the income section, you can do it one of two ways. You can either leave it blank, or you can just put in $1 if your system requires something to be and inputted into the income section. We know there's a lot of POSs out there that require that. But the reason for that is obviously at the time of putting together your 1003, you don't know what the income yet is on the bank statements. We haven't calculated the income yet for you, as opposed to if you're going tax returns, you can do the numbers and run the math on the income. On the bank statement side, we don't know what it's going to be. So when you're sending the 1003 over to us, we ask you to input either, again, $1 if your system requires it, or you can just leave it blank. Other than that, the rest of the 1003 is going to be exactly the same way you would complete it for a standard Fannie Freddie conventional loan. Borrower owns real estate, please fill out REO as detailed as possible, your declarations, etc. But again, the more information we have on that 1003 specific to obviously the housing history for the borrower and the employment history for the borrower, the higher quality pre-approval I or any of our account executives are going to be able to put out to our customers.
Yeah, Scotty, yeah, you touched on it there about the housing history. Housing history for us is really critical. So, and you know, one of the things I've been stressing a lot lately, if you know you are going to meet with a self-employed borrower, please get their tax returns, but why not ask them for 24 months of their business bank statements or 24 months of their personal. Then you can go down these two parallel paths and figure out which way is the better way to go. You know, we always say it's not the W-2 person buying those luxury homes. In most cases, it's that self-employed borrower. So save yourself, because time is of the essence. I mean, I've seen, you know, like Stacy mentioned, multiple backup offers. You know, if you're trying to go down that route with tax returns and then all of a sudden realize they don't qualify for that house, now you're coming back to us and you're going back to the borrower, grabbing those bank statements, coming back to us. You know, that turns into a few days of an additional in the process that really, if we all go out there and get those bank statements at the time of the tax returns, you know, let's go down both those paths together.
Yeah, it's such an important point, John, that you just made, you know, and I think it's one of the best pieces of advice we that do non-QM all day, every day can give to everybody on this call is, you know, if you have a self-employed borrower, buyer looking for a pre-approval, obviously you're going to ask for their tax returns, et cetera, but it's just another question. Just do me a favor, send me your bank statements. Send me, if you own a business, send me your business and personal bank statements. Get all the information up front. It's just one more question you're asking, but now you have all of the information to be able to guide this borrower into the right direction. And you may look at those tax returns and say, okay, tax returns show borrowers making 100 grand a year. But then you might peek at the bank statements and say, wow, they've got a ton of cash flow here. Let me send these over to my account executive, Angel Oak, and see how much income this gives me. And we may be able to now qualify that borrower on 200 grand a year in income. Yeah. So now you just instantly added more value to that buyer and your referral source, because you took them from looking at houses in the 500,000 range to maybe houses in the $1 million range. Yeah. So, and really, if you didn't ask the question and didn't have the bank statements, you would never know. So it's key to get the information up front. It costs you nothing to send those bank statements over to us and let us calculate the numbers for you.
Yeah, I know Stacy, how great is that to solidify a referral relationship just by doubling, you know, that purchase power. So it's fantastic. So Stacy, I promise you, we're going to get to your questions, but really, by the time we're done with this, you're going to know 1003 is what they need to do. And Stacy's going to talk about credit. What does the credit have to look like, Stacy?
So we do go down to a 600 mid credit score. If you have that borrower that I mentioned, the co-borrower that's W-2'd income, and we can clearly see what that W-2'd income borrower has, we will use the primary wage earners mid score. In our mind, common sense, the person that makes the most money is probably going to be the one that pays the largest bill of the household, which is typically your mortgage. So if we can clearly see who makes the most money, who the primary wage earner is, we're going to use that mid score, which might not always be the lowest score, might actually be beneficial for a higher LTV or a better interest rate. We do want to see trade lines. Our trade line requirement is 3 trades for 12 months or 2 for 24. Now they can be closed as long as they were closed out within the last 12 months. So the data last activity is what I look at. As long as the data last activity is within the last 12 months, we can count that as a qualifying trade line. A lot of times you'll see medical collections. We totally ignore those. Doesn't matter how recent they are. Medical's not looked at. But as far as any other collections or charge-offs, we really don't want to see anything in the last 24 months. Sometimes you'll see a small Sprint or AT&T. Is that something that we can get around? Absolutely. Remember, this is portfolio products. So it's a lot of gray. It's not black and white. It's not, like Scott said, it's not run DU, you're approved, you're not approved. There's a lot of gray area in the non-QM world. So if you do have somebody and you're not sure of it, send the credit report over to the AE. Let us take a look at it. We're going to be looking at the trade lines. We're going to be looking at overall, does it make sense? A lot of times you have a borrower that maybe had a bankruptcy and they're real skittish to get more credit, get any more depth. Maybe they just have a mortgage and they really just haven't opened anything else up and they just want to pay cash for everything. Every loan has its own story. So tell us the story. Let us take a look at it. If it makes sense, we're going to do the loan.
Yeah, and a lot is, we know we're not the only QM shop in town, but I will tell you this. There's not another Stacy Flanagan in the country. There's not another Scott Grabell in the country. And that's why really your AE makes or breaks your deal. And, Stacy touched on this, 30% of the deals that Angel Oak closes don't meet our guidelines. And it's because of Stacy and Scott. They know the second, third, fourth level questions to ask that's going to get us to say yes. And I will touch, our vertical integration, we don't have to check with the end capital. We know what loans Angel Oak Capital is going to buy. We're not checking with a third party aggregator that has to sign off after you get a CTC. So that's the benefit of working with Angel Oak. So Stace, thanks for covering the credit. We're going to jump into questions. There's one question, Stace, and the question similar to what you talked about with the W-2 co-borrower, but this question is if the business owner also has a W-2 job, can we still do that borrower on bank statement, Stacy?
Yes, absolutely. As long as at least 30% of the total income is coming from the self-employed job, then yes, we can use W-2, fixed income. Maybe they get a pension or Social Security on the side. Maybe they get child support or alimony on the side. Absolutely. Again, I don't want to see tax returns, but just prove that income through W-2s, awards letters, child support might be through a divorce decree, but yes, we can definitely use that as additional income.
So hopefully, Monica, that answered your question there. Stacy talked a little bit about 12 and 24 months. What's the difference? I know 12, don't.
The difference is 12 months.
The difference is 12.
The difference really, there is no difference from an underwriting standpoint. The difference in pricing more than likely is going to be 1/8 of a point. It could change if you're at the higher LTVs to maybe 1/4, but for the most part, it's 1/8 of a point. And it's such a great option. Again, trying to relate it back to the conventional world for everybody to understand is think of it as no different than if you're using a 1-year tax return program versus full doc on the conventional side. Same thing here. We're giving you the option to use 12 months bank statements versus 24 months bank statements because, as Stacy mentioned, the most recent 12 months probably show more income, which is why we're using that feature. So there's just a slight bump to the rate to use it. But what a feature. I mean, great feature, especially in the current environment with what we went through in 2020.
Yeah, and Stacy mentioned it, Scott, you touched on it. You know, we'll determine, get the 24 months. We'll determine whether you should use 12 or 24. You know, in some cases, we might have to use 12 because they might have, the income could have increased so much that we're going to limit that. So that's one reason why we might use only 12. And also they might have decline in income. So that might be the other reason why we use 12. Let Scott, let Stacy, let all our other AEs help you make that decision, but go get the 24 months first. Scott, there's a question. How about gift funds?
Yeah, great question. Gift funds are allowed on all of our programs, including the bank statement program. So if the borrower is using a gift, we require the borrower to come in with 5% of their own funds to the transaction for down payment, and the 6 months reserves. So as long as the borrower has 5% of their own funds plus the 6 months reserves, the remaining amount can be a gift. So for example, 80% LTV loan, 5% for your borrower plus the 6 months reserves, that other 15% can be a gift from family member.
Yeah, so that also helps tell the story for the borrower too. You know, sometimes when there's competing offers on there, maybe who's putting a little bit more down, sometimes that wins the deal. Stacy, talk what our DTI ratios are for bank statements.
Yeah, and just to kind of piggyback off Scott too, that is just for primary residences. We don't allow gift funds on investments or second homes. But another key factor with us is we only season our funds for 30 days. So we can be working on the loan, they can get funds deposited into their bank account and then let them season there. And then we get the bank account that doesn't show any large deposits that we have to source. So just keep in mind the gift funds are just on the primary residence, but we only season our funds for 30 days on our program, which is amazing.
Yeah.
As far as DTI goes, our max is 40 on the front end, 50 on the back end. Those are hard stops. So we can't go beyond that, but it's 40 front, 50 back.
Yeah, Scotty, you talked a little bit about, maybe housekeeping, but here's a question regarding, if a person runs a cleaning service and payments are going into their personal bank account, can we use that personal bank account?
Absolutely. Yeah. I mean, that's the most common scenario we see for somebody that might be Schedule C, not incorporated, but running a cleaning service. It would be the personal bank statement option.
Yeah. And Stacy, another question, keep those questions coming. Do we require a CPA letter? And give us some, like, I know we have it showing up here, but give us some of the expense factor ratios and maybe touch a little bit of that personal, touch on expense ratio. I'm getting ahead of myself, so sorry.
I knew this was going to come up eventually, so this is good. Definitely a great question. So when you guys send your AE, your pre-qual, you're going to send us, like Scott said, a fully complete 1003 without the income section filled in, credit report, and all your bank statements. We send the bank statements to our review team, which is going to calculate the income for us. They're going to calculate the deposits. They're going to look for anything to back out, like a PPP loan. We see a lot of those lately. So when they come back with the monthly income, they're going to use a 50% expense factor. It's basically our default expense factor. We know every business has expenses. If 50% expense factor works and that income, we're fine with our DTI, we're going to run with it. You don't need an expense ratio letter from a CPA at that point. Now, if your DTI is high and we need to use more deposits than 50%, then yes, we can get a letter from a CPA or a tax preparer that says what the expense ratio is for that business. So let's say they own a ice cream stand and the CPA is going to write a letter that just says the expense ratio for ABC ice cream stand is 23%. If it's an amount less than 30, I'm going to use 70% of the deposits. Now, if they're 1099 or work from home, there's no employees, they're an IT guy or computer guy or woman, then we can use down to a 15% expense ratio, meaning we can use 85% of the deposits. Also, not to confuse you more, but if you're using personal bank statements and they have a business account, but for some reason, all their their deposits go through their personal account, but they do have a business account, we're going to assume that all the expenses are paid through the business account, and then we're able to use 100% of the deposits going into that personal account. So again, the AE is really going to help you with this. When you submit the bank statements, we're going to look at it. We're going to look at the 50%, see if it works. If it works, we send you your pre-qual with your income calculated and tell you what it is. If it doesn't work, that's when Scott and I are going to do a deeper dive into the expense ratio, see what the business is, how many employees do they have, what's a fair expense ratio to make the deal work.
Yeah, and I know Stacy shared a lot of expense ratio factors there. But again, Stacy, Scott, they're the experts in this. They will hold your hand through the entire process. Scott, we have a question here. What about large deposits? How are we looking at those, and how are we gonna able to use those, or if not, use them?
Yeah, that's a great question. So obviously large deposits are going to pop a red flag for us if they're not customary, if they're what we consider an atypical deposit. But we do look at all of the factors involved in the loan. So if it happens to be a profession where large deposits are common, and we're looking at the 12 of the 24 months bank statements, and we might be able to see that every third month or so, or maybe twice a quarter, there's a fairly large deposit, because that's just the nature of how that profession gets paid, or that borrower gets paid. In that case, we're going to be able to use those deposits. But if we're looking at 12 months of bank statements and we see that on average, the monthly deposits are in the range of $10,000, and that's compromised of a bunch of deposits that are $1,000. And then in one particular month, we have a $25,000 deposit. That's obviously what we consider an atypical deposit, which would be backed out. It's a one-time event that has occurred over the course of the year that is not considered normal or ordinary regular income. So that's basically how we're looking at those. Now, one feature that we've recently added is that when we run the number and the average of what the monthly income is, or the deposits are, we will use that number from that large deposit. So you're going to get some credit for it. We're not going to give you zero credit. You will get some credit for that large deposit. And that really, really helps when we're running the numbers and doing the calculation.
Yeah.
But like
go ahead.
I was going to say, like you mentioned, is the beauty of it is we do all of that income calculation for you. We look at all of that for you. So we try to make it as easy for our loan officers and our customers as possible, in the sense that, obviously you're going to review your statements and go over everything. But if you have any questions about anything like that, you literally, all you need to do is send the statements over to us and we can run the income for you.
So hopefully, TJ, that answered your question. Thank you. Stacy, while Scott touched on bank statements, what are our turn times right now for getting that team of experts that solely calculates that income? What's our turn times right now?
So we post that it's 24 to 36 hours or 24 to 48, but honestly, I've been getting them back. They work 24/7. So they work round the clock. I've been getting them back with max 24 hours.
Okay.
So it's quick. I mean, we'll tell you 24, I'd say 24 to 36, but I've been getting them back right around the 24-hour mark right now.
Yeah, so I mean, as I said, go down those parallel paths, because I think everyone on this call, if you asked everyone on this call to look at one set of tax returns, you'd probably have everyone come up with a different answer. And that's the beauty of having our team and Scott and Stacy calculate that income for you up front. And that's the income that's going to be used throughout the entire process, underwriting all the way to when we close your deal. So Scott, talk a little bit about, Stacy touched on interest only. A couple of questions here. How do we qualify the borrower when they do decide to select the interest only feature?
Yep. So for qualification purposes, we're going to use the full index, the full payment. Basically, it's not going to be your interest only payment. It's going to be the full PITIA that we're going to use for qualification, and then they can utilize the 40-year option of having that lower payment for those first 10 years.
Yeah. And Stacy, a question here for escrows. Do we allow the borrower to self-escrow?
Yeah, they can waive escrows. There is a slight hit to the rate to waive escrows. They do need at least a 700 mid score and up to 85% LTV to waive escrows. But yes, that is an option that they can have.
Cool. And then new construction, Scotty, is new construction allowed?
Yeah, absolutely. We can do the end financing on new construction purchases. We do those all the time.
And one thing you really start to think about, where I'm starting to see a lot of are cash outs. I mean, even though rates have gone up, your cash out is still a great way to either continue to build your business or start a new one, right? And it's not being taxed. You get $500,000 not being taxed. That's pretty outstanding right there. A couple of other questions. Stacy, I know you talked about we'll go down to a 600 score. Give us some of the criteria for other LTVs. And I know you mentioned nothing has MI, so just touch on those.
So if you do have the 600 mid, that's going to be a max of 70% loan to value. 640 would get you 80% loan to value. 660 would be 85. And the 700 is what's going to get you to 90% loan to value.
Yeah. So, and Stacy mentioned this earlier too, second homes will go up to an 85% LTV with our bank statement program for second homes and investment properties. And again, no MI. So I know there's a lot of questions about rates, and we're going to talk a little bit more about a couple of tools that we have, our quick quote tool. I know we're half past the hour, so we'll talk about log. Scott, do we allow condotels?
Condotels we do not allow, no, on any of our programs. We do non-warrantable condos, as Stacy mentioned. Obviously, there's a lot of reasons why a condo can be non-warrantable, so we just have to look at them case by case. Condotels is not one that we can do. We can do some short-term rentals. So anybody that's purchasing a condo and is using it to true condo residential building being used for the purposes of Airbnb or VRBO, those we can do. We just cannot do the traditional condo hotel like a W or a Hilton that is selling units in there.
Great, thank you. Stacy, talk about maybe using multiple bank statements.
Sure. So we can use multiple businesses. We see that a lot. We see people that operate one business, they might have an operating account and then their regular business account. We can use multiple business accounts as long as there's no commingling of funds. So you might also see a person where the wife has one job, self-employed job, and the husband has another one. They each have their own business accounts. Again, we can use two separate business accounts as long as there's no commingling of funds.
Thank you. And then I think last question, will we allow, I've got two more. So, and then we'll get into our quick quote tool and then talk about maybe marketing, some marketing things that we can help you grow your business. Will we allow them to close in an LLC, Stacy?
That's a great question. Yes, on investment properties only, they can close in an LLC. The LLC does not have to be seasoned any length of time. They can open the LLC. It does have to be for investment purposes or for the particular home purpose. And anyone on the LLC must be on the loan, and we allow a max of 2 people on that.
Great, thank you. So I think, Scotty, maybe this, what about if a borrower has 22 months of self-employed, maybe not that 24 months we're looking for?
So if it's a straight business owner, there's some room there for us to make some exceptions. We have made exceptions at the 22 or the 23 month mark in terms of being able to write up the pre-approval, get the process started, knowing that the loan is going to close maybe in month 24 or maybe even in month 23. And then there's a lot of situations where it makes sense and we make an exception. So one that I see very commonly is you might have somebody that's been running their business. Let's just take a handyman, for example. He may have been running his business for 5 years out of his personal bank account, filing as a Schedule C. And then at the advice of his CPA, he incorporated to take advantage of some tax write-offs. When we can show the personal bank statements and the business bank statements and show that the deposits and the sources of income are exactly the same from when he switched from personal bank statements to opening up a business, accompanied with an accountant letter, we've been able to make exceptions like that. So those are things you definitely want to discuss with your account executive, because there is some room there where we can make exceptions.
Yeah, like I said, 30% of the loans we close don't meet our guidelines, and it's because of Stacy and Scott and their experience and expertise in knowing what Angel Oak likes to close. Stacy, last question. This is really the last question. NSFs, how do we look at NSFs?
So our guideline says we allow 6 in the last 12 months and then 6 in the prior 12 months. Again, Scott and I both touched on, and John as well, there's exceptions. You know, you have 8. That's definitely something. We're going to look at the whole profile of the borrower to see if an exception can be made. The other thing that I'll look at, besides, you know, what is their LTV or what does their credit score look like? How much reserves do they have left over? So those are kind of compensating factors that we'll look at to see about making exceptions. The other thing that we're going to look at is, when was the last NSF? Was it the 12th month ago or 11th month? So by the time we get towards closing, that bank statement's going to be replaced by another one. You know, how many will fall off? You know, those are kind of things that we're going to look at. Rule of thumb that we go off of, again, is 6 in the last 12 and then 6 in the prior 12 as well.
Yeah, thanks, Steve. So we're gonna move on. I just want to make sure everyone knows, you know, all these other programs we have, and we're going to get with Linda and FAMP and see, you know, about maybe doing a deeper dive into what we call our investor cash flow, which is our debt service coverage ratio, and talk about some of our full doc programs. And those dates and times we'll see when we determine to do those. Sorry about that. But right now, Scotty, let's go through a quick quote scenario and maybe talk a little bit about the process on how people can get 1003 and credit reports to you guys.
Yep. So this is, you know, if there's one thing I think everybody should take from this call, is definitely bookmark this pricing engine, angeloakms.com. Right on the homepage, you saw John clicked on the non-QM quick qual. That's going to bring you here. You do not need any credentials. So you can literally come on here and price any scenario you have. You're going to get live right up to the minute pricing, along with some pretty general guidelines on that scenario as well. So when you click on the quick qual, it's going to ask you to select your channel type, depending on if you're a broker or a wholesale. Most are broker. So John selected broker. And then you're simply just going to enter your scenario here. So John's going to go ahead and put in a sample scenario here so we can look at what pricing would look like live. As you can see, as John's inputting the information, it's already starting to think, and it's beginning to spit out programs. And as you can continue to change the information on there, it will update the pricing and the information in the bottom of the rates and program section. So in this particular case, just to recap, we have a loan amount of $750,000. We have a credit score in there of, I'm sorry, John, I lost that part of the screen. 740 is 759, 80% loan to value purchase on a bank statement program. And as you can see, the pricing engine gives you all of this information. It tells you you requested an 80% loan to value. By the way, we can go up to 90% on this scenario and max LTV. Your borrower paid par rate is 6.375. It's also giving you some notes that your seasoning for a bankruptcy is 24 months. Your housing event seasoning is 24 months. You require 6 months reserves for this particular scenario, and there's a lock duration of 30 days. Now, if you wanted to see more detailed pricing where you can offer the borrower some rebates as you would on the conventional side, or what some of the lender paid pricing might look like, you can click on that view rate button and you'll get this table that John is showing you here. This is the full pricing stack. Anything, of course, showing a negative is going to be a credit back to your borrower. So in this particular scenario, for example, if you lock this loan at a 6.625, that's paying $3,750 rebate back to your borrower. Or on the flip side, you'll see some of the lender paid options where on the other side, where it may be costing your borrower if they want to buy it down, etc. Now, assuming you choose the par rate here, you click on the select option. This will
Scott, let me
take-
know if my screen disappears or anything, so.
No problem. Scroll up a little bit, John. This will take you to
Sorry.
step number 2.
Yep.
So when you get to step number 2, you can upload your 3.4 file here if you have it buttoned up and ready to go. If you don't, that's okay. You can just click on the next button. It'll take you step 3 where you can manually enter the information and drag and drop your document. So here you would select your account executive name. You'll put in your company information, your personal information, but down here in these boxes, as you can see, you can drag and drop your 1003, your credit, your 1008, your bank statements, the bank statement questionnaire if you have it. And what's really cool here is that this has very high capacity. So you can literally drag and drop 24 months of bank statements, highlight them all in one shot, dump them right into that bank statement box. If you have additional documentation, the sales contract or anything else you might have, you can drag and drop it right into that box, 1003 and credit, of course. And then you can come down here and add any additional comments, answer the 3 credit questions, which is just a drop down, and submit. Once you submit it, that's going to go directly to your account executive. We get a notification immediately as soon as this comes in, and it's notifying us that you have submitted a pre-approval request. We can then take action and begin the process of getting the income calculated on the bank statements. Once we have that back, we'll put together a full pre-approval, send it back to you with all of your terms and conditions and any specific notes you might need to know of on that file, on that scenario.
Yeah, I mean, if you haven't noticed already, Scott and Stacy are basically pre-underwriting your file for you, right? That's, you know, and, you know, we say as an AE, this is our calling card. This is our credibility. This is Scott, Stacy, and Angel Oaks brand. And if they ever are unsure about a certain situation, we have a help desk that we go to and they approve it. And this is all done at the pre-qual stage. So, you know, we're not putting your relationship and your referral relationships in jeopardy. We are going to produce, basically pre-underwrite that file, and the income, like we said earlier, from the bank statement review team is going to be the income we use throughout the entire process. So, Stace, let's talk about, you know, we've always talked about, but I've seen it more and more each day and each week goes on as rates continue to go up. Everyone's asking, how do I market these programs? How do I get to these borrowers? And I'll log in here. These, Scott said, quick quote, doesn't require login credentials. This does require credentials here. So get in here, Stace, and I'll have you talk about some of the great marketing tools that we have available to people.
Sure. So like John said, you do need credentials to get in here. So if you don't have credentials to our website, you can reach out to your account executive. They can send you the form to get set up with credentials. You can put as many employees in your branch that need credentials at the same time. Also on our website, you can go to resources and documents, click on the broker package, and you'll see it's called the user request form. And you can fill it out right online and send that back to the TPO email address to get your credentials. So once you get logged in, across the top, you're going to see the marketing portal. I have to get up close because I can't see it. But it's still really small.
Okay.
So when you go to marketing portal, you'll see the drop down and then it'll say, oh yeah, there we go. Thank you. These old eyes. You'll see flyers. If you click on flyers, this will take you to all of our different flyers that are available to you guys. You're going to brand these with your own information. Angel Oak's not going to be anywhere on there. It's basically free marketing tools for you guys. You can take them to open houses, drop them off at real estate offices, drop them off at builders, whatever you guys want to do with them. In the left-hand column, you'll actually click on a flyer that you want. There's some Spanish-speaking flyers in there as well, down towards the bottom. But you click on the flyer that you want to customize. So if we go to...
Can you not see my screen, Stace?
It's coming on now.
Okay.
Yeah, You have the alt income bank statement loan flyer.
Oh, I was looking for the CPA. Okay, yeah, no, that is the CPA flyer. So
This
if
looks
you were,
good too.
yeah. So, for example, sorry, Stace, for example here, everyone just got done probably filing their taxes last month. Why wouldn't you customize a flyer and take this to your CPA and ask them to send this out to their entire database? So you fill this out once for one flyer, it populates all the flyers we have available. Today, we just talked about bank statements, but we have, I think, up to 30 flyers out there. And as Stacy mentioned, some are in Spanish, so we can, market that channel for you there also. But it's I would challenge anyone on the call to really take advantage of these, really. And we've had more and more people ask about it. Stace, if you're having trouble seeing my screen, I could go through the rest of the marketing stuff. We also have social media posts. So we have, speaking of bank statements, we have them catered towards borrowers, and we have them catered towards realtors. And I have a statistic up here on my wall. Almost 9% of the bank statement deals we close are actually for realtors. So, and then that's number 3. Number 2 is construction and home improvement is almost 15%, and professional and business services are almost 17% of the bank statement loans we close fall into those categories. So, we're giving you, we're giving you the keys to drive right here. I mean, it's really, and then the most popular one are realtor presentation. I know Scott and I know Stacy do a ton of these. They will go on your behalf and present to your referral source. So you don't have to be the expert on these. And Scott and Stacy or any of your other AEs available to you are going to present on your behalf. They're not going to say anything about Angel Oak. They're just going to say, hey, I'm here with Linda. I'm one of Linda's investors. And we're just going to talk about the programs that Linda has available through us as one of her investors, but she has a ton of other programs that she can help you close your loans with. So these are powerful presentations. And I use this, if you get 10 realtors in a room, you will get at least one of their own deals. I promise you that. And it's statistically backed up at 9% of the business we close are realtors. So that's all we have today. I know we're coming close to the top of the hour. I don't know if Linda, if you want to jump back on, and here you are. Okay. So,
Here, yeah.
I don't know if there's anything we missed, Linda, or.
I don't believe so. I had a couple questions, maybe
Sure.
just for the audience itself. Now, obviously the 40-year fixed interest only program has to be a really popular one. Have you seen an increase in that type of originations for that specific product?
Let Stacy or Scott answer that.
I've seen a huge increase in demand for that product in just the last 30 days alone. Because obviously with the pricing environment that we're in right now, there's a shift to try to sell payment a little better. And so borrowers may have been shopping for properties with a limited inventory, may have taken a while to get under contract. And now they're looking at their pre-approval from 30 days ago. They may no longer qualify. So there's a lot of factors going on there. And by having that option of lowering the monthly payment on the interest only, it really puts them in a position where they feel like they can get into that property and feel comfortable with that payment versus where they were just 30 days prior. So yeah, we're getting a lot of increase in inquiries for that program.
So you just said something, Scott, that's going to prompt this other question. You said qualifying. So do you qualify them on the interest only payment or do you call them on the full PITI, or did I miss that?
I'm sorry if I caused any confusion there. We're going to qualify them on the full payment.
Okay, all right.
We're going to be able to get them into a lower payment, obviously using that interest only feature.
Right. Okay. And you also mentioned, I think it was Stacy that went over delayed financing. So when that is, obviously, I think a lot of us are seeing that out there. Do you price it as a purchase, or do you price it as a cash out refinance, or is there any difference?
That's a great question. We do price it out as a purchase. So if they qualify for 90% on a purchase, we're going to give them 90% of their money back on a delayed financing.
Okay, great. That's a big one, I'm sure, out there. So,
Oh, yeah, definitely. No hit to the rate for cash out either.
right. And the difference between non-warrantable condos and condo hotels. So some of us think that condo hotels are non-warrantable condos. So your description of a condo hotel would be as if there is a, a rental desk on site or management company on site. Maybe elaborate a little bit on that.
Okay, Scotty, I'll let you take that.
Sure. Yeah, exactly right, Linda. If there's a rental desk on site, a front desk, or if the condo, the building itself is advertising rentals on a website or anywhere, we would consider that a condo hotel. It's not something we would lend on. You're 100% right. Condo hotels technically are non-warrantable condos, but a condo can also be non-warrantable for lack of reserves, maybe litigation, maybe a high investor concentration. And now today, with all of the changes that took place in January, it could be due to not meeting all of the new inspection requirements that Fannie and Freddie require. One of the beauties of our condo, really it applies to all of our programs and how we handle condos, is that first and foremost, we do not require any of the new inspection requirements that Fannie Freddie put in place back in, I think it was December or January. We don't require any of those. We have our condo process really has not changed. We can accept condos that have litigation as long as they're not structural or safety related. So we're pretty flexible on litigation. We can go up to 100% investor concentration. We can't allow any individual to own more than 15% of the units, but we can, or entity, but we can go up to 100% total investor concentration in the building. And then when it comes to reserves, we're very flexible. Obviously, to qualify on a condo conventionally, you have to look at the current year's budget, and the current year's budget needs to meet the reserve requirement for that particular loan scenario. With us, we handle it a little bit differently. We're going to take what's being collected in the current year's budget, but we're also going to use any funds that the association might have set aside from previous year's collections. A lot of these buildings have collected over the years and have a nice reserve sitting there, so they may not feel the need to hit their unit holders for 10% in the current year. They only hit them for 5%. Well, we can take that 5% plus the balance that's in that separate reserve account, and we can total the two together to meet the reserve requirement to qualify that borrower. So I know it was a little bit of a long-winded answer, but
No, it's a great answer.
cover everything there.
Do you require then a condo questionnaire that's so that's still it's your tailored questionnaire then? It's not a thing.
Yeah, and that's all we require. All we require is the Angel Oak condo questionnaire. We don't need a copy of the budget. We don't need the condo docs. We don't need anything else. Literally, all we need is for them to complete the Angel Oak non-QM condo questionnaire, and that's all we need to make a decision on that condo.
Okay. Okay, and lastly, LLCs, businesses, you're allow.
Stacy covered that a little earlier, but Stacy,
Right.
go ahead again.
Yeah.
Yes, please elaborate a little bit more on that.
Sure. We can close in an LLC on investment properties only.
Right.
So
Okay.
owner occs and second homes, no, but investment properties, we can close in an LLC. Anyone that's on the LLC does have to be on the loan. Up to a max of 2 people is all we allow on the LLC. And the LLC can be created at any time. There's no seasoning that it has to have been created 6 months ago or a year ago. It can be created yesterday and still.
Okay. Yeah, that's a good point to make too. So I appreciate that very much. I think that's all for my questions. So you guys really did a great job today, and we will certainly look at, doing an additional one webinar. I know someone at FAMP, so we can probably get that done for you. So, but again, for everyone that's on today, thank you for attending today. We will send out the video recording of this. It will also be on our website as well. If you're not an FAMP member, if you are an FAMP member, I thank you for your membership. If you're not, please consider it, because it's industry partners like this that help us build our membership, and we need a relationship with an Angel Oak and other industry partners out there. But John, again, thank you, and Stacy and Scott for participating today, and again, thank you for your continued support.
Our pleasure. Thank you.
Okay, all right. Have a great afternoon and happy Cinco de Mayo to everyone.
Hey.
It's time for our margaritas now. Thanks again.
Thanks,
Thank
guys.
you.